Oil lower on demand worries, but new Iran sanctions cap disadvantage SINAGPORE. Oil costs edged decrease on Friday as call for issues emerged following interest fee hikes within the week, although new sanctions on Iran capped the downside. Brent crude futures fell 47 cents, or 0.4%, to $119.34 a barrel, even as U.S. West Texas Intermediate (WTI) crude futures fell to $117.02 a barrel, down 57 cents, or 0.5%. If losses preserve via the day, Brent crude futures could put up their first weekly dip in 5 weeks, even as U.S. crude futures could see their first dip in 8 weeks. The imperative bank's rate hikes are pressuring the oil prices, no matter ongoing tight materials, said Tina Teng, an analyst at CMC Markets. Central banks throughout Europe raised hobby fees on Thursday, some by way of amounts that bowled over markets, and hinted at even higher borrowing charges to come back to tame soaring inflation. This is eroding financial savings and squeezing company profits. Argentina's crucial financial institution raised its benchmark hobby fee with the aid of the most in 3 years on Thursday, because the South American country fights inflation jogging at over 60%. Those movements came at the heels of a 75 foundation factor price hike this week by using the U.S. Federal Reserve, the highest for the reason that 1994. However, buyers remained targeted on tight substances after the United States introduced new sanctions on Iran. The market has been watching negotiations among the West and Iran in anticipation of revival of the nuclear deal in recent months. This brought back into cognizance the continued deliver-side problems in the market, ANZ research analysts stated in a notice. The United States on Thursday imposed sanctions on Chinese and Emirati groups and a community of Iranian corporations that assist export Iran's petrochemicals, a step that may goal to raise strain on Tehran to revive the 2015 Iran nuclear deal.